Hi, this is Kim Watson. In this video, I just wanted to cover a question that I was asked this morning. It's a great question, and it's a logical question, bearing in mind what we've been seeing with the euro. And if you come, I'm on a weekly time frame. If you come down the time frames here, you'll see that it's 4-hourly chart. It's been selling off. It's very steep, and it's really been selling. And the hourly's absolutely been hammered. And in fact, since what was it, about 8 o'clock this morning, there we go, 8 o'clock candle, it's come off another chunk. But the question was, is it time to start buying the euro now? Now we've seen this sell-off. But well, that's the question, and it is a good question because, and I say why it's a good question, because a lot of people will be buying it. If you look at the FX SSI sentiment, or looking at sentiment, the euro dollar, over 70% of traders effectively, or positions at the moment, the size of the position, over 70% is long at this stage. Now this may need updating, but it's updated 8 minutes ago. Got a feeling that's wrong, but yeah, 9 minutes ago. It's 74%, so even more have literally jumped in on the long side. So a lot of people now are buying this market. Now, one of the things that we get asked or suggested to, and I think it's Warren Buffett who put it in stocks, is buy when everyone else is fearful and sell when everyone is I don't know, what was it, joyous or whatever it is, everyone else is wanting to buy. Sell at those points. And there's good reason. And at the moment, though, is everyone here in this level fearful? I would suggest not, because they're buying. So surely they're not yet. This might not be done at that stage, and it may not be the right time to come in. So the question, I guess, is when is the right time? And the right time for me is simply when it's actually shown you on that price chart that it's starting to go up and it's not coming down. We get very focused on looking at tops and bottoms, and it's almost strokes the ego, and we've all got an ego in trading of some sorts, and it's managing that ego, that you don't need to be spot on the top or spot on the bottom when you're exiting or going long. You just don't need to be there. In fact, Jesse Livermore from the Confessions of a Trader, was it called, Stock Trader, he spent a lot of the time reading the tape and getting very good at seeing the signals of some selling coming through, and he'd be pretty close to a top or pretty close to a bottom for buying, and he traded like that for a long time, and overall he didn't make much money. In fact, he went through quite a lot of losing cycles because he got wrong. He would be thinking, well, I'm going to be selling maybe into the double tops here, and he might be, whatever it was, he was recent price, whatever reason it might have been, and it kept on taking him out. So he'd have been wrong several times. Eventually, he could have been wrong 5 days, 6 days, or 6 weeks on a row here. But either way, he could be wrong a number of times, and then he gets right. But his right isn't covering all his wrongs. And okay, that's another thing in terms of your risk and rewards and holding positions and holding them as long as you can. But the important thing here is what he identified, and a lot of people say, and I totally agree with it, is you don't need to be in at the absolute tops and bottoms. There's plenty of meat in between. Even these smaller, let's take the smaller movements to the upside. If you've got it right, even if you wait until like the third week here, there's still quite a chunk of movement to go up there before you might see some weakening, and you say, well, actually I'll be aggressive, and you get a good chunk out of it. How many times are you wrong weekly wise on an event like that? If you're taking it there and you maybe put a stop below here, giving it enough leg room, how many times you're wrong? Well, you're not really, are you? You've gone in there nicely. And it's a case of here where you sort of start seeing it rolling over, and you might have good reason to be thinking, well, this market should be shorted. Do I start? I mean, where are they going to start shorting it? It was running south here, so they're running to the short side. So it would have been quite right, looking for an opportunity maybe around these areas. But all you're trying to do is catch the absolute top to prove yourself right to go down. But how much down? Maybe down to the bottoms or something. Whatever, it doesn't matter. The important thing is you can wait. You can let price do it, show you its hand a lot clearer, and even wait for it to break through beyond just a few bars or whatever else, you could wait even a longer time. Particularly, well, you don't know what wave it is in necessary when it's doing this, but just waiting for some bigger movements. And you could have been short on here, from here, from here. From the break here. There's a number of ways, and still, okay, retrospectively this is very easy, but still made some money. Yes, you could have read the Elliott waves and read this one and put it on here and said, well, actually this is too late, I need to be in a bit earlier. And people have their edge to get in earlier on some of these moves, and some people may have a bit of an edge to be thinking of getting long at the moment. However, another thing to take into account, you don't just need to get the bit in the middle, you don't need it all, that's the important thing. But the other thing is, look at the point of least resistance, or support as it might refer to at this stage. Where's least what's going to stop the market more than anything else? I'll call it resistance even though it's support. But if you look at what's already happened, and we are just looking at what's happening, and we're asking the question at the moment of whether we should be going long. Look at the bars, the action, the price action leading down here, apart from the wave structures that's going in. To be fair, I'm measuring this wave structure from an Elliott wave situation, but just look at the price bars themselves. Where are the bigger ones? Where's the point of least resistance? Are the down days. The down days are generally, there's more down days which are bigger than the green bars. Now, it seems very common-sensy and very simple, and you look here when it changed direction. Look at those big green bars that started coming in relative to the recent weeks of shorter. Okay, that was a decent red one there, but the point here was easily more softer. The point here at this stage, it was strong. There was some momentum building into this move. As I said, you could have been a bit late into the move and it may not have gone in and put you a new high in or whatever else, but hopefully you'd have been able to get a chunk of that out there. It didn't need to be all the way up there, and it may have been a small chunk, but that's the way it goes sometimes. And then other times you get into a move which you've waited a while and you've got into that bigger chunk, and it's going for you and you're edging the stop down. But the important thing here was, as I said, is looking for those bigger bars where the momentum really sits. Forget all the indicators of other indicators. Look at the price. When the price is sort of putting in you the bigger red bars relative to the smaller, shorter, the bigger trend is to the downside. If you then take this analysis from this is a weekly chart, and then start running it down the time frames, let me just clear this for a minute, and start running it down to a 4-hourly time frame, and you're looking at that analysis and thinking, well, I'm interested in the shorts. Well, then you take the breaks of the short side. So and look here, look how, okay, this is the news that came in yesterday, and it's pushed it down solidly, but all the way through there the bigger bars were to the downside. It's all sign in sign in sign. So at the moment, should I be buying at where it is at the moment? Yes, it may be oversold, but it can stay a lot more oversold longer than you can stay solvent, I would suggest. So you've got to take that into account. But it's not really showing me any guidance. The more important thing is it's not showing me to say, well, this market's changed now. I don't need to be first in. I don't need a big ego. I can be patient. I can still take the opportunities to sell it tomorrow. If it retraces, I might look for selling points. You've got to keep a clear mind of what it's doing. Keep coming back, multiple time frames. Look at what's happening on the dailies. Big red bars. It's still looking southbound, and where the points of least, as I say, point of least support at the moment is to the downside, and that's the way it should be going. If it's running up, it'd be the point of least resistance, would be pushing to the upside, and it's carrying on. So key things. Look at the colours. Look at the bars, the price bars. Look what the price action's telling you. Look at trading. You don't need to be in at the absolute tops or the bottoms. You can wait for the signals, and there'll be plenty of opportunities. Yes, you would have got stopped out maybe if you'd got short somewhere down here and you'd been tracking your stops down. Eventually, you would have been stopped out here maybe, but or part of it depends how aggressive you are, but it doesn't really matter. If you get a good chunk of the midpoint, that's what counts. And the other important point is you're not frequently getting stopped all the time because you're going against the grain. So you're not getting those short squeezes coming in and giving you a hard time. You're just going with it, and you're absolutely lapping up when the market makers are pushing the price down further. Right, that is it for me. Sorry, 10 minutes long. I was trying to do it in 5, but there was 3 different points in there really, and it was important to point them out. So have a great one. Hope you find this useful. If you do, please put a thumbs up on there. If you've got comments, do feel free to comment. Thanks a lot.